comparing it to Trump himself, Trump 45. So just to give you some perspective, Trump 45 created 7.2 times more jobs than Trump 47 has in the first year. So there you go. Thursday, February 12th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, before I start, just like to thank all of you for your interest in the channel. And for those of you who are new to the channel, make sure you subscribe and make sure, in case you enjoy my videos, to hit the thumbs up and share as well with friends, colleagues, family. That always helps. So a lot to talk about today. Not just about the economy, the markets, but a bit about politics, I would say, as well. And most of you know that I don't care much for politics, but we need to follow it because in this day and age where governments are so heavily involved in the economy, you need to keep an eye on things. My philosophy towards politics is the following. And I quote Emma Goldman. She said, if voting changed anything, they'd make it illegal, right? So just want to put that out there. I have no favorites in politics. But what we're going to cover today, mainly the main topic for the day, is the topic of the U.S. economy. We're going to look at how well the jobs market is really doing. We had a number yesterday, and there's a lot of cheerleading after the number, the non-farm payroll. And the other thing I want to cover is the Dow, or the stock market in general. We had the Attorney General give her opinion on the stock market, trying to deflect from other topics, which we're really not going to cover that much. But one thing I would say that really describes Pam Bondi, and this is as far as I'm going to get. It's the passage in the Bible. It's Timothy 6:10, and it says the love of money is the root of all evil. So I think she won that prize yesterday. Anyway, before we go into the topic of the economy, the jobs market, and the Dow, is to do with Pam Bondi as well, of course. I'm going to show you why the Dow actually is not doing that well. But before that, I'd like to talk a little bit about the UK economy, where I am. I even have a playlist for the UK economy called UK Economic Collapse, right? I have another playlist about the UK debt bubble, the debt collapse of the UK. And today we had GDP numbers for the fourth quarter of 2025. And not surprisingly, maybe surprising for the mainstream economists, for politicians, but it came out of only 1% growth year on year for the fourth quarter. It's expected 1.2, so it's an anemic economic growth. The other thing I would say, if you look at the budget deficit in the UK, it's running around 4.3%. Yeah, it's a little better than in the US. US, it's running more like at 6%. But the reason I bring that up is that the formula for GDP, you add government spending. So if the government is spending 4.3 times more than it takes in terms of GDP, yeah, it's the only reason why GDP isn't negative is because the government is spending so much. So it's a really unhealthy economy. Bank of England didn't cut rates the other day. Why didn't they cut rates? Well, because the CPI, what they call inflation, right, is running still, latest data is still running at 3.4%. And I made a video back in 2022 about how the UK Statistics Office, the ONS, actually changed the whole methodology of CPI, and how CPI is actually now 1% less than it's been historically. So that 3.4 is more like 4.5 or even 5%. So what we have in the UK is stagflation, and the Bank of England has a difficult task because, yeah, it needs to keep confidence in the system. If it cuts rates too far, foreign investors are going to flee the country, and gilt yields are going to rise even more. Yes, gilt yields have been, and gilts are the UK government bonds, they've been under control for the last few years after the 2022 crisis, Liz Truss and Kwarteng crisis. But the levels of yields are still higher than they were at the heights of the crisis. So we've also got some industrial production, manufacturing production. They were all horrible numbers, a lot lower than expected. We also got trade balance. That was bigger than expected. The deficit. Construction output was worse than expected. So all in all, not good shape, the economy. And I suspect the Bank of England might have to start cutting and say to hell with inflation, really. They're going to opt for inflation, and that's why it's still really important to keep hold of your gold and silver, not just here in the UK, though, everywhere, because they're going to have to keep inflating. What else is going on? Well, I'm going to talk about the gold chart and the silver. We'll come to that at the end. Now let's switch over to the main topic. And I usually don't follow these things too much, but it was popping up everywhere on X. And it was like I don't know, it was melodramatic what happened in U.S. Congress yesterday. Pam Bondi, the Attorney General, she lost it. I would say she completely lost it. And at one point, instead of sticking to the subject of the files, right, and all that, she switched over to saying, oh, well, look at the Dow, it's at 50,000. Look at the S&P, it's almost at 7,000. And the NASDAQ is going crazy, is going massively higher. You know, this is what we need to talk about. And trying to deflect attention from a topic that not only affects the Trump administration and the Republicans, but it affects the other side of the aisle. This is like an establishment problem, and it's not just in the US as well, it's everywhere in the West. Our governments are really corrupt, and that's not surprising. There's an old saying about politics that, the scum, I guess, rise to the top, something like that. Politicians are all compromised, and the powers that be behind the scenes, they use that to their advantage. And I think this Epstein files is all to do with this mechanism, and that's why they're trying to keep it really hushed up, because if the real truth, if it's all divulged, the whole system could implode. The economy, the markets, the currencies. And how do I feel about that? Well, I think it should. Just like I thought they should have let the banks collapse in 2008. Just like I thought they shouldn't have intervened in 2020 and print hundreds of billions or if not trillions of dollars. Yeah, we seem as a society to be wanting to kick the can down the road. All we think about is money, not what's right or wrong. And that's why I came out with that passage from the Bible that the root of all evil is the love of money. Some people say money is the root of all evil. No, I think money is a really good human creation. It facilitates specialization, it facilitates trade, it facilitates economic growth. But the problem is when money is corrupted, like it's been since 1971, when there's nothing really behind it, and central banks and governments can create it out of thin air and bill it to you in terms of in terms of taxation and inflation. Sound money, honest money is not the root of all evil. It's the love of money. And I think not just the U.S., but the West, we've gone so far down into this philosophy that we don't even care anymore about what's right and wrong. And so that's what it's about. In terms of, so they want to deflect the attention, but I would say that the Dow 50,000 is also like a distraction against the real health of the stock market and the economy. And why do I say that? Well, because as most of you know on the channel, and as if you followed me, that gold is money. It's been a measure of wealth, a stable measure of wealth for thousands of years. In ancient Rome, a troy ounce of gold would get you a very lovely toga and sandals, pretty much like a troy ounce of gold now will get you a really nice tailored suit and brogues, right, or shoes. So if you don't look at the financial assets in terms of gold, you're looking at it in terms of fiat currency. And we know now with gold at 5,000 and silver approaching 100 or having been at 100, we know that they're trashing the dollar, they're trashing the pound, they're trashing every fiat currency. And up until 1971, really, indirectly, everything was priced against gold because the dollar was fixed to gold. If you go back even further to pre-1933, well, the dollar was as good as gold, even domestically. So all this talk of Dow 50,000 is not only a distraction against the what's going on in terms of this list, Epstein list, it's also a distraction about the health of the economy. So here's a chart of the Dow gold ratio, and all that is the Dow priced in real money or in troy ounces. So right now it's below 10. Really easy to calculate. You take the level of the Dow divided by the price of gold in troy ounces, and it's below 10. It's the lowest it's been since 2013. Yes, recently it went even lower, but yeah, historically we haven't been to this level since 2013. And the chart is really keeling over. And if you look at it on the long-term basis, let's say a monthly chart, I think it's inevitable that we're going to go at least 1-to-1. So yeah, that's why the establishment, Wall Street, that's why they hate gold and they try to keep it off the headlines, right? They try to keep people away from it as well in terms of investment. So yeah, to Pam Bondi, I say have a look at the Dow gold ratio, and the Dow doesn't really look as good as you think, Miss Bondi. What about the jobs number? Yeah, I saw that it came out. It was a lot better than expected, right? 130,000. One thing I can say, I've been around for a long time. I remember back in the 90s when I was working in the city. The jobs number back then were still really important. They've been important since then. We used to get 500, 400,000 jobs a month on non-farm payroll. So now when we get 130,000, yeah, there's all this cheering, right? And to prove to you that I'm not anti-Trump or anything, as I said, I'm apolitical, really. The only reason I follow it is to see what's happening fiscally, because governments are so huge these days that they affect everything in the economy. But I did a little bit of research, and I took the period from January 2017 to January 2018. And why did I do that? Well, that was Trump's first year in office, Trump 45. And I had added up all the non-farm payrolls in those 13 months, and it came up to 2,252,000 jobs created. Average monthly number was 173.23 thousand. And I would add that a non-farm payroll is a survey, right? So these are not real jobs created. These are what companies that are surveyed by the BLS tell them that they think, how much they're going to be employing, in their payrolls. It's just a survey. But anyway, and then I looked more recently from January 2025 to January now, 2026, Trump 47. And I was kind of shocked because there's only 311,000 jobs created. Trump 45, 2.252 million jobs created in those 13 months. And 24,000 average a month. So not good. And I'm comparing it to Trump. I'm not comparing it to Biden, because a lot of the numbers during the Biden administration, especially in the beginning, they were kind of warped. They weren't really real because it was after the lockdowns and the furlough, right? Everyone was coming back to work and they were placed back on the payroll. So you had huge numbers. I'm comparing it to Trump himself, Trump 45. So just to give you some perspective, Trump 45 created 7.2 times more jobs than Trump 47 has in the first year. So there you go. So is the economy really doing that well? I don't think so. So how come GDP is so strong? Well, it's a little bit like the UK. When you calculate GDP, you add government spending. And in the US, government spending and deficit spending is even bigger. If the government was running a balanced budget, instead of 6% of GDP deficit, GDP would be a lot lower. The other thing I would add is that we know that in the last 12 months or so, AI data center expenditures has contributed to more than half of the growth in GDP. So it's all based on, I would say, a sector that is highly leveraged. Some would argue that it's a bubble. Yeah, I wouldn't argue with them about that, but be as it may, it's continuing to grow. So is it any wonder that President Trump and his administration keep going on about rate cuts? Well, if the economy was doing really well, they wouldn't really care. There's too much cheerleading from the Trump administration in terms of the economy. And the reason they're doing that, of course, is because things are not as good as they seem. And I'm not saying it's all Trump's fault. I think it's much bigger than Trump. This is the end of the fiat money regime, and everything is topsy-turvy. The debt is out of control, right? And the only way to keep the debt going and the system from imploding is to inflate and make sure that people don't realize it. I mean, this is not me being a conspiracy theorist. This is also what Ray Dalio, one of the most successful hedge fund managers, said the other day with Tucker Carlson in an interview. The supply of dollars and debt is growing, and it has to keep growing or else the system implodes. So let's go to the markets now. It's 8:04, a.m. London time. And I wanted to show you first the chart of gold here. It's a weekly chart of gold. Yes, we had a massive run up towards the end of January. Gold got up to the high was 5,602, the spot price. And then it corrected by the beginning of February 2nd, the week of February 2nd, it corrected down to a low of 4,402. So, 1,200 point move, very volatile. And why did it happen? Well, I think it got a little bit ahead of itself. And the bullion banks took advantage of that, of course. But it's bouncing right back up, as you can see on this weekly chart. And I think it's starting to look quite bullish. I don't like making calls like this, but I wouldn't be surprised if we are near 6,000 very soon. And what do I mean by very soon? I don't know. Maybe a month or so. But I've seen that even the bullion banks now are upping their forecast for gold for this year. Silver is going to take a little longer, I think, to kind of pick up. But once it does, it's we're going to blow right through that 121 level, I think. And I think the Gnome of Zurich is going to be right about the 199 level. And I think that's coming soon. Just like gold is going to 6,000 in my opinion very soon. And what else? Well, let's quickly look at where things are this morning then. Spot gold is at 5,070. It's down $14. The high's been 5,100 and the low has been 50.44. Yeah, silver was hit hard overnight. As usual, we got down to 81.50. Right now we're at 83.80, down like 50 cents. The high's been 85. And the other thing that we need to keep an eye on, aside from price in silver, which is really more important, is the dwindling supply of silver in the major exchanges of the world, like COMEX, Shanghai Gold Exchange, Shanghai Futures Exchange. And we have a post here from Dario this morning. And it says 2,500 open interest rolled forward from March 26 to May 26 silver futures contract. That's on COMEX. Well, that means that people who are long March silver, they've rolled into May. They sold the March and bought the May. So that means they're not going to stand for delivery in March. But there's still 65,000 open interest in March, and there's still a couple of weeks to go in February before the March contract becomes deliverable. So the 65,000 open interest is 325 million ounces, and the registered supply of silver on COMEX is only 98 million. So it's going to be really interesting keeping track of this open interest and also the registered supply of silver in the vaults, because that could go down as well, because there's a lot of people taking delivery right now in February, which is not really a front month. So I'll stop right here and wish you all a very good day. Take care. Bye.